Todd Thompson, real estate broker with the Pioneer Group, and we're here today to talk about the USDA mortgage and how that might be the right program for you if you qualify. Again, I've asked my favorite mortgage machine, Jason Jean, to come in and talk to us about the USDA mortgage. Welcome, Jay.
Thanks for having me, Don.
Oh, it's always a pleasure. So today we're here to talk about the USDA Farmers Loan, Rural Housing Loan, and all kinds of names over the past years, right?
Yeah.
So, but it's a great program for the right circumstances. So tell us a little bit about that.
Yeah, so, as Don mentioned, it used to be called the Farmers Loan, as some of you may recall. It hasn't been referred to that in quite some time. And
I'm just showing my age.
Quite honestly, that really is more confusing because farms are ineligible for the guaranteed USDA loan program. In fact, it really likes single-family homes only. And so it's a great loan program as long as you can get everything to qualify. So first is you. It has great, very flexible on credit. You do not have to have perfect or even really good credit. You can have moderate to, questionable credit to be able to qualify for this loan. Assets, you really don't need much for assets. In fact, the USDA program says if you have too much money in the bank, they can disqualify you. So because this was set up for people that could not afford the 20% down payment. So they're going to look at your assets, and if you have too much money, you're not going to qualify. The seller can pay for you. Generally, the seller is paying for a lot of your closing costs. So, what happens is Don will write up your offer, and in that offer, he's going to say, seller to pay for your closing costs. So now there's many times that we get you into a property with less than $500 to $1,000 down. And, if you were to rent, you're going to have to spend more than that on first, last, and security. So the rates on this, 30-year fixed rate, very, very low. A lot of the times it's beating the conventional rates that you'll see advertised in the paper. The mortgage insurance, the monthly mortgage insurance on the USDA program is very, very low, relative to other programs. You could save hundreds of dollars by going with the USDA program. You just have to make sure that the lender you're dealing with does USDA because there's very few that do. It's not a very common program out there among the banks and mortgage companies, so make sure that that's something that you do ask them because you can save hundreds of dollars each month by going with this program. The property is probably the biggest factor. Because it has to be in a USDA eligible area. So a big city, not going to qualify. Check out the link below, and that will bring you to the USDA property eligibility website. That's where you can type in an address, and it will very simply pull it up and say this address is eligible or this address is not eligible. You can also contact us to find out more information as well. And we can look up properties for you if you'd like. But this is a rural development program. So it's not eligible in the big cities. There is, these addresses are changing over time. So as new census data comes out, they do update that property eligibility website. And so occasionally you'll find on there it will say future property. And you can click on that to see when the next fiscal year is coming out and which properties are going to be eligible for that. The fiscal years do start October 1st. So each October 1st, they can reevaluate eligible properties. So that's the USDA loan program in a nutshell. Some of the things to avoid, you are going to want to, or you're going to be required to get a water test. So that is a coliform and a general potability test, which you'd want to do anyways. Obviously, if there's a well, if it does have city, municipal water, then you don't need that. But most of the time, we're dealing with wells. So you're going to want to get a general potability test. They usually run about $100 or so. And then the other things you want to look out for with the property is, does the property have anything that could potentially become income producing? And the keyword is potentially. So a lot of things have the potential. But USDA is very, very rigid on this. They do not allow anything to have the potential to be income producing. That would be an in-law apartment. That would be a downstairs that has maybe a kitchenette in it, even just for entertaining purposes. Doesn't even have to have a bedroom. Those types of things would potentially need to get torn out before closing, before the appraisal. Any type of barn on the property, has the potential to be rented out, and they don't like that, so they won't approve your loan. So there's very, very specific requirements to the USDA loan program. So do not go into a USDA, offer without being properly educated as to the potential pitfalls. It can be one of the best loan programs on the market, but if you're not aware of the potential pitfalls, you could also lose some money too. So make sure that you're working with a lender who's very knowledgeable on the subject.
Okay, so to recap here, it's a 100% financing, no money down. It's they're pretty liberal on their income requirements, their credit requirements. They're not so liberal on their property qualification requirements. They're pretty strict on that. So you want to make sure you're dealing with a lender who does USDA loans on a regular basis, because not all of them do. And you have any other questions, you want to check our websites below. And again, I want to thank you, Jason, for coming. It's always a pleasure to have you here, and I get all kinds of useful information that I can share. So please check our websites below and like, share, and subscribe to our channel. To your success, this is Don Thompson, real estate broker with the Pioneer Group. Have a great day.